Siyanamukela kwi-Ithala Education Platform ibambisene ne-Go Digital SA Foundation. Siyathemba nizolijabulela lolu hlelo.
Good afternoon, grade 12s. I'm Mrs. Mahwa, who's going to take you for economics. I just want to start by separating our papers. We know we have two papers, paper 1 and paper 2. So for starters, we have to know what are the topics that falls under paper 1 and what are the topics that falls under paper 2. I know that we learn this in different terms, but let's forget about that now, because right now we're preparing for our trials. For paper 1, you've got 7 subtopics, which is a circular flow. Our circular flow includes the national aggregates and the multiplier. We'll talk about that. The second one is business cycles, where you're going to get your new economic paradigm and the features underpinning the economic business cycle. Then the third one is the foreign exchange markets, where we have to talk about our balance of payment and being able to calculate and understand how do we do our exchange. Fifth one is growth, economic growth and development. Then the industrial development in South Africa, and we know why is it done. Then the last one for paper 1, it's economic and social indicators. You will realize that whatever we're going to talk about, it does interact. The work that you did in term 1, you'll also find it towards the end. For instance, when we talk about the industrial development, we are addressing what we were talking about in the business cycle. That's for paper 1. Then paper 2, we have about 9 subtopics. For our paper 2, I know we have the work. Some of you haven't finished the work, which is for term 4, but we have to wind up because right now we are preparing for the trial exam. In our paper 2, that's when we're going to learn about the cost and revenues. Remember, we did this in grade 11. It's just a recap. Then we'll continue to talk about the perfect market and the imperfect market. That will also include all our market structures. We will move on. Then we'll look at how these markets work. Unfortunately, we have to deal with the market failures. And if you remember correctly, in term 1, 2, you will also talk about the public sector and how they fail to provide. So we will just go back to remind you what is happening, because like I said, doesn't stand on its own. These things work together. Then we'll do our inflation, our tourism, and our environmental sustainability. I think majority of us are just in that part. So today, I just want us to start with paper 1. Remember, I said to you, we'll start with the circular flow. What I have in my hand here, I have a graph, which you did in grade 10, grade 11. That's what is nice about economics. We don't just learn something in grade 10 and leave it like that. All what we're doing, we are just putting more and more and more on each other so that you understand it. We start with the basics right here. I think most of you can see that I've got the open economy. Why is it an open economy? You can see now, Guti, the one that I have here, it has a foreign sector. So that tells you that our circular flow, it has an opening, which means the money doesn't revolve only on this diagram here as a closed one. We also have the relationship with other countries. That is why we're saying now it is an open economy. Let's just look at it a little bit. You know, when we talk about a circular flow, we're saying that's why we see the interaction of all the participants. It's important that you understand the definitions, because the definitions are the ones that we use when we do our essays. Remember our essays? They have an introduction, they have the main part, and they have the conclusion. It's introduction, main part, which is the body, and the conclusion. These three They give you, the first one gives you 2 marks, second one gives you 26 marks, and the third one gives you 2 marks too. You can see now that you've got 30 marks. That is why in all the essays we have to add the additional part, which is always 10 marks, and that will give us our 40 marks for our essays. So while I'm trying to explain this to you, I'll also remind you, what do you do if, for an example, one question from a circular flow, it's being asked as an essay. Let's go back to our circular flow. We're starting with the participants. We have three participants that falls under closed economy. Then we add the fourth one. I'll keep on going back to our drawing. I have here in my hand the participants, which is the household, that is us, the consumers, the businesses, which is the business sector, and the government. Because we know our country, it's a mixed economic country, which means there is no one who can just do as they please. We have the government that controls everything. And these three, they are the ones that tells us it's a closed economy. But remember, Mem said, we don't work alone. That is why I also have a foreign sector. That is the fourth one in our participants. Why? Because we have this relationship with these other countries. We have agreements with these other countries. We buy and sell from them. So sometimes they do ask you, please define all the participants that are interacting in the economy. The minute they say they are interacting, it means that you have to explain how each one of them is working with each other. In other words, they don't just work in isolation. Let's go back to the households. Households, they go and look for work. Obviously, we have these two markets here that we said it's a factor market and a product market. So when these consumers, as my drawing is saying, when they go and look for work, they go, my drawing goes to the left-hand side, to the factor market, where they are employed by the producers, which is our business sector. So when we go and look for work to the producers, we expect payments. So that is why the first arrow on the inside, it goes to the factor market where factors of production are offered. Why do we offer those factors of production? So that we can get income. Who pays that income? It's these producers, the business sector. Look at the arrow that goes up. Look at the arrow. It gives us income. It's written there, income. Then what do we do with this income? You can see underneath here, between factor market and producers, it says factor services. Factor services doesn't only include human beings. That is where we also get raw material. That is where we also get capital, all the machinery that we need in order to produce. All this, when it happens, it's because we expect an income. What else do the business sector does? The business sector uses factors of production to produce goods and services on which household sector spend their income. Also, businesses place goods and services on the product market, which is brought by the household to satisfy their needs. Look at my drawing again. There is the product market here. That is where we get all the goods and services. Where do consumers get the money to buy? Because they did go and get employed and they produced goods and services that are sent to the product market. This tells me, we can see here, that we are the ones who are producing these goods and we are the ones who are buying these goods. This tells us circular flow is in a balance. The people who have earned money and produce goods are the very same people who are buying these goods. What's happening with the government in the middle day? We know that as household, every parent, I believe you know your parent, they always complain about tax. Tax this, tax that. Unfortunately, they have to pay tax because the flow of money of goods and services that is happening between the household, it also happens between the household and the state. Remember, I'm not employed by businesses. I am employed by the state, which means the state also has to pay me. What am I going to do with my money? I take my money home. That's my household. Then I provide goods for my family. But even before I see my money, the government takes tax. What does the government do with that tax? Our drawing tells us, I just talked about expenditure, the money that I spend when the government pays me, but that's not the only thing. Government also take taxes from me. I just put a tick in that drawing. Why is the government taking that money from me? So that they can provide me with the public goods. I'll be happy if my street is clean. I'll be happy if all the rubble is removed. The government has to pay for all those services. They are not only provided to the household, those services are also provided to the producers, which means the government interact with the household as well as the businesses. What do they give us in return? They give us public goods. We know it doesn't end there. The government needs a lot of money to build roads, electricity, all the infrastructure that we need in order to be able to work. What happens with the foreign sector? The minute we talk about the foreign sector, it means we have opened our economy. That is why we're saying our economy is an open circular flow, because now there is a flow of goods, which are imports that we buy from other countries. Because we don't have certain things, it doesn't mean we have to live without. Some of you, they enjoy all those brand names that are not manufactured in South Africa. It means they are being imported from other countries. Businesses that import these goods, they pay for it. This will then be regarded as an expenditure on the business. There is also a flow of goods that now we sell to these countries, which are exports. Other businesses in the country, they do sell goods to other countries. In that way, they get money. I want you to remember that, because we will have to talk about what is the money that comes into our country and what do we call the money that goes out of our country. Just pause that thought, I'll come to that. This relationship that is happening with all the participants, you know, when your parents earn money, abaholi nje ngama envelope, we've passed that. All the monies, they go to the financial institutions. That's our banks. Even if we pay for our taxes, the money is already taken. When the government or industries pay us, the money goes to the bank. So all those, they belong to the financial sector. It's not only the banks, it's banks, insurance companies, and all other funds that are there. They are kept in the financial institution. And let me remind you, these financial institutions, they are also business, because there are people who are working there, tellers, they get paid. So all these financial institutions also, they fall under producers. They fall under the business sector. The money which the household and firm provide to the financial sector is known as savings. I don't take all my money. Sometimes I save my money. Sometimes your parents also have different investment, but you don't see it because with modern technology, things have changed. We save our money just with a click of a button. Everything is done. In our case now, in these days, we do EFTs or internet banking. It makes things easier so that we don't stay in those long queues. This spending on capital equipment by firms is regarded as investment. I'm going back to my drawing. I just want to show you these flows that we have. If you look at my outside drawing, I've got income there, I've got expenditure there. Income, expenditure. That is the money flow. That's how money flows. And be careful. If you look at the arrows of the money flows, they facing the same arrow. They don't meet. They face the same direction. Same thing applies to goods and services, factor services. They also follow each other. The arrows do not meet. Look at the factor market here, where I put a dot, and look at the factor market below. There is no arrow there, which means it's a flow that goes around. That is why our drawing, it's a circle. It can be either a square, but it's a flow. It follows each other. There is no way where it can meet because we're going to have a problem there. So looking at my notes, we're saying real flow, it's the flow of goods and services and the factors of production. Why are we saying it's a real flow? It's because it's something that you can touch. We can touch goods. You can see me. I provide factor of production, which is labor. I believe you remember that. So that's a real flow. Anything that we can touch, it is a real flow. What about money? I did tell you income and expenditure. That's money. It's a money flow. It's the earnings of money or income and payment when it's made. So all these, they tell us, all these participants, they interact because of this. Sometimes they might ask you to explain the real flow and the money flow. We know in our questions, section B, they usually ask us questions that need us to give 4 points, which is 8 marks. So sometimes they do ask a thorough or a detailed explanation of money flow and real flow. Let's start with real flow. What are you going to do? You're going to say it's consumers render production factors to producers and government via the factor market. Goods and services are supplied by producers via the product market to the government and consumers. You can see everything that I've mentioned, I can touch. Government provide public goods and services to consumers and producers. And lastly, you can even say producers receives goods and services, which are imports in a form, and they can be delivered as goods and services. What about money flow? Money flow, consumers earn money, like myself, we earn income for their production factors via the factor market from businesses. In this day and age, we don't just go to industries and stay in the gate and we say we're looking for jobs. It doesn't work like that. That is why we have that middleman who is a factor market. It doesn't mean that it's someone that we can touch. The middleman can be your internet where you just send your CV. So you can see here, there's nothing tangible. Business sector earn an income for goods and services via the product market from consumers and the government. Government earn an income from consumers and businesses in the form of taxes. Businesses earn an income for export from foreign sector and make payments to the foreign sector for their imports. I know you know that money, we can never send a rand. It will depend which country we're working with, then we make our exchange. We have to buy that currency of that country. We will reach there at the right time. I just talked about exports and imports. That is why now I have to explain to you or make a difference between the leakages and the injection. When I talk about the leakages, think of your tap at home. When you didn't close it properly, your mother will shout at you, "You're wasting water. We're paying for this water." Why? Because the water is leaking. When you buy goods from other countries, you're taking money out. Money is going. You're taking away our economy. So that is why we're saying a leakage represents a withdrawal of money from the economic cycle. It doesn't give rise to any further round of income because you're buying. Nothing is coming in. Domestic purchases on goods and services, they decrease because now people are buying from other countries. In an open economy, the leakages are taxes, because the minute I pay tax to the government, I'm not using that money anymore. That's a leakage. That money has been taken out of the circular flow. The expenditure on imports, which is represented by M. I know some books here, they put a Z. Don't mind that. It's how it is. Some books, they use Z for imports. Some, they use M. I prefer M because you can also remember that now we're talking about imports. Then savings. When people are saving their money, it means they are withdrawing their money. It's not in circulation anymore. So please remember these three. It's taxes, imports, and savings. They fall under leakages. We move on to injection, which I like the most. Why? Because it brings money into our country. It increases our economy. And we did talk about that. I know your teachers have taught you that when economy increases, we live a better life. Our standard of living improves. Let's look at injection. We're saying injection represents an injection of money into the economic cycle. It also refers to the flow of any spending which is not derived from income. Remember, whenever we talk about income, we use that abbreviation, which is Y. An additional money enters the economy and it increases income. Domestic purchases on goods and services increases, which means your aunt, my daughter, gets a job. Because if we buy more goods, more domestic goods, it means that we are buying those goods and we're creating job opportunities for our aunts and our brothers so that they can continue to have job opportunities. In an open economy, injections are government spending, which is abbreviated as G, are exports, which is represented with X, and our investment spending. Remember, whenever you invest your money, that's different from saving. When you save your money, you're not using it. But when you invest your money, you are allowing these financial institutions to take your money and make more money for you. That is why we're saying it is an investment. So these three, they are an injection. Maybe you're asking yourself, how can government be an injection? For the fact that some of us, they go to school, they don't pay school fees, that's government spending. Government is investing in us. For the fact that others, they also receive lunch at school, government understand that you must have power. You must be able to sit there and listen. That is why you get lunch. It's not just for fun. The government is investing. So you need to know, when you are not putting in effort, you are letting the country down, because the government believes in you. The government invests in you. That is why we're saying these are the injections. Look at my drawing. Ever since you started economics, you've been talking about equilibrium. So equilibrium in economics is very important. So for leakages, where we said they are withdrawals, they must always be equal to injection. What is UMEM saying? UMEM is saying, maybe I painted leakages in a bad way because they're taking money out of the country, but the reality is, as an economic country, we need a balance. There is no way that we can do without leakages, and there is no way that we can do without injections. So how can this be a win-win situation? Only when leakages equals injection. That means our savings, our taxes, and our imports are equal to government spending, investment, and export. On the right side, money is coming into our country. On the left-hand side, money is going out of the country. I did a representation here which shows disequilibrium, which is an opposite of equilibrium. How does that happen? An economy is in disequilibrium when leakages are more than injection. This is how it's represented. And injections are more than leakages. This is how it's represented. So we know that each country, they will enjoy injections. But unfortunately, we don't live alone. We live with others. They also have the same interest as we do. Let's move on, good people. We have a mathematical representation of this, of what I'm talking about. Just now, I just told you that when we talk about income, we use a Y. Then when we talk about expenditure, we use an E. These are the abbreviations that we use when now we calculate. You cannot do economics without calculating. The first thing we have to calculate, what people spend. Let's start with income. Remember, I said to you, I earn money because I've worked. So the consumers, which sometimes we call household, government spending, plus injection, plus investment, plus export, and minus import. Here's the minus here. I put it in brackets for you. Why do we have to take away imports? Remember, I said it's money that is going out. The minute we buy goods from other countries, we're taking money out. So that is why it doesn't belong to income. Same thing in expenditure. We only spend money that we have earned. Consumers, they spend money. You can even look at this calculation here. I just gave a tentative amounts of money that I use. I just didn't think of these numbers. All the economic statistics that we use for our economy is obtained from the quarterly bulletin of the South African Reserve Bank. This is important. They will always ask this in the multiple choice. Where do we get all these statistics? Every example, every textbook that you use, the statistics that are there, sometimes in the books, they do write at the bottom there, where did they get that information? And it's always, when it's economy, it's either receipts or income. It's obtained on the quarterly bulletin of the South African Reserve Bank. And it's always in each quarter of each year, it's always there. So it makes things easier for us so that we can just talk about the numbers that we know. We don't have just to think about anything. Everything is there for us. Look at my calculation now. I put import there at 40 million. I put investment spending in 180, and I put consumption spending at 110 million. Then exports, the money that we obtain from other countries is 25 million, then the government spending of 110. And I did give you your equation. Here is your equation here. Let's look at it again. We said 110 million, it's for consumption spending. If you look the top part, all these participants are just jumbled up. But if you look at the bottom, you have to follow the equation. Your equation starts with consumption. Remember when I was showing you that circle for open economy? It started on the household. Why? There will be no business if there were no household. Your dad is the one that started the business. Your dad, it's the one that we voted for him to go to the parliament. That means everything starts with the household. So that you shouldn't mix up these equation. Your 110 million, it's for the consumption spending. Your 180, it's an investment spending. Your, where's the government spending? Your 110 again, it's for government spending. Then you add the money that we obtain from other countries. The total here, from the total, then you minus this 40 million. Why? Because that was a leakage. That's the money we used to buy goods and services. That is why we have in our South African bank, which is South African Reserve Bank, we have that 385 million. I'm not going to dwell on why they have these statistics. You know that every money that is in South Africa, South African Reserve Bank has to know. We move on. We're looking at what we call, let's start it like this. How can we make sure that these 386 million multiplies? Because now there are so many things that the government has to use. There are so many things. Government needs a lot of money. What happens here? Let's look at this. In economics, you've learned about the multiplier. It's just a mathematical term that says whatever money we have, we want to multiply it. How can we make it bigger than what it is? Let's start by definition. Multiplier shows how an increase in spending, which is the injection, produces a more than proportional increase in national income. That more is very important. When people invest, they don't, in fact, we even research which company can give me more interest, which company can give me more money. So the fact that we are dealing with the economy, it means that we want to make sure that our economy grows. Remember, I said to you, if we have an increase in economic growth, it means our living standard becomes better. The multiplier must always be more than one, and it works in opposite direction. What is UMEM talking about when UMEM is saying our multiplier should always be more than one? One represents a unit for us. In economics, we inject money. The business person puts his income, which we call capital. The minute he invests it in the business, it changes. It's not an income anymore. It becomes capital. The money that he is going to use to produce whatever he produces in order to make sure that he makes more money. That is our multiplier. What must happen is, as we are saying, it must be more than one. It means that when the size of the multiplier is big, it means the MPC also is big. Okay, I've got this at the bottom here. If we're saying it's the multiplier, we're just looking at this amount of money that I have, this income that I have. So what do the business people want to do? They look at the size of the multiplier and they want to make sure that whatever money has been put in, it is multiplied. That is why we are saying the larger the multiplier which is consumed, the money that is consumed, which is called the marginal propensity to consume, that's the money that has been used, then the bigger the multiplier. What does that mean? It means that when you invest less, you get less money. When you invest more, you get more money. Simple as that. So what I have here is, usually, even myself, I don't use all my money. When I get an income, there is always part of my income that I don't use. We have to have money for emergencies. Even the businesses, when they decide, okay, I've deposited this 100,000 in a business account, it doesn't mean that they're going to use the whole 100,000. The marginal propensity to consume, it's the portion that they have used. So what we must look at now, I said to you, the money that they need to get must be more than one. It means the investment, which is capital, it's equal to 1. Then I have my MPC here, which is the money that I've used, minus, I take this whole lot of money that I have, I minus the MPC, then I get the marginal propensity to save. That's the money that I have saved. I've got your calculations here, which I think might make it easier. I know it's not an easy thing when you don't have an understanding of how it works, but look at these notes that I've made. I said to you, if you take your whole unit to 100,000, which is 1 in this case, it's a unit. Then I used, let's say, 60% of my money, which is my MPC. It means I'm left with 40%, which is my MPS. Because now I said I have 1 unit. For me to get 1 unit, it means I've used 0.6 and I saved 0.6. That is why I have this here. This is the formula for a multiplier. That A here stands for multiplier. Some books, they use a K. Remember, I told you, we use different books. What we're teaching is just economics. We're not teaching a textbook. So don't mind. Whatever your teacher taught you, you can use that abbreviation because it's what is generally acceptable. So this is your formula, your initial amount. If it was 100,000, this is my 100,000 1. Let me put it here. This is my 100,000 1 divided by the same 100,000, which is now my MPC. My MPC will be, I said, 0.6, which is 60,000 in this case, which means I'm left with 40,000. When we change that into units, we can say 0.4. That is why for this unit, which is 1, I said your multiplier should be 1 divided by 1 minus 0.6. That will be equal to 1 divided by 0.4. This 0.4 is your MPS, which are your savings. Then, if you take your calculator now and take this 1 divided by 0.4, you realize that you have multiplied this 100,000 more than twice, which is what I told you at the beginning. I said, whenever you invest, you should invest in a business that will give you more than what you have invested. In summary, I'm saying to you, whatever amount is invested, in most cases, they don't use all their money. So you must make sure that it's MPC that is important. And that is the larger amount. Remember, we said the bigger the multiplier, the bigger the MPC. So in this case, rather than us using 40,000, we decided to use 60,000, which is a bigger money than 40,000. That is why we're able to multiply our money more than twice. We get here 2,5. When we do these calculations, we do it in a form of graph. How can you be in economics without a graph? This is your graph. I'll put together at the end. I have your nice graph here. Remember, when you are being asked, let's say you are given 10 marks. You are being asked with a graph or an explanation of a graph, explain the multiplier. The minute they say that, always, if it's 10 marks, graph is 4 marks. You can have all this, but know that X's are just 1 mark. Labeling is 1 mark. The equity line there, which is the income or expenditure, it must be equal. You can see here, I made sure in my drawing, which this side here of expenditure is the same, is an equal size with the income. Why do we do that? Because we want to make sure, in fact, that's what happened. Nobody can spend money that they don't have. We're not talking about thieves here. We're talking about people who are working. So that is why it's important that in our 90-degree, we make sure that 45-degree is for expenditure, 45-degree is for income. Meaning, when you are working, you earn an income, then the very same income, it's the one that you spend on goods and services. Remember, I just said to you, I've given you this for 10 marks. What you're going to do, you're going to make this drawing, figure 1.4, then I'll award you 4 marks. Then with all this explanation, it's going to be 6 marks. So it doesn't mean that if you're not sure about the graph, you mustn't explain. Explanation, it's important. This can happen even if it's essays. When they ask you an essay that needs a graph, graph is only 4 marks. Make no mistake. Sorry about that. Let's look at this graph now. What is happening here? Our Y's stands for income. And you can see that with the first initial expenditure, where there is original E, that doesn't have any number next to it. That is our original expenditure. Remember, I just told you which expenditure comprises of consumers, the money that we've earned, we're spending, investments, government spending, plus export minus imports. That's your expenditure. That is why we have that line. What is happening here is the minute they put more injection, because now they are in business. They want to make more money because it looks like they are making a lot of profit. When this happens from E to E1, it means that there is a shift. There is more money that has been injected in this economy. Look at my explanation. Expenditure is E, and it is shown on the vertical axis. And when you look at that, the aggregate expenditure now, AE, that is C plus 1 plus G plus X minus Z. This curve shows that the amount which consumers, producers, and government and foreign sectors spend or plan to spend at every level of income, it also equals to aggregate demand. Aggregate spending is equal to aggregate demand. Remember, in economics, we're talking about equilibrium. In order for us to protect ourselves from inflation, we have to make sure that what we have produced, it's what we will buy. Because if there are few goods, people, when they buy few goods, and there are many people now who are earning income, look at Y1. That means there was an increase. Since there was that expenditure, E1, there was also an increase, which means there were more people who were employed. Because if there is only an injection and there is no income, it means there is a problem there. There is a problem there. It means all these people now are chasing over few goods. Automatically, our prices, they increase. And that's inflation. That's not good for our country. So it's important that you understand that all we need to make sure that our aggregate expenditure is equal to our aggregate demand so that we can avoid inflation. That was my multiplier, good people. It will help you to go and just take an example in any question paper, because the only way you will know it's when you do your practice. This graph needs your practice. Remember, you've got a 45-degree line that gives you expenditure, which is equal to income. Then for each injection or investment, there is income. And there is your equilibrium here. I didn't put it in this graph, but that will be your equilibrium, which means the money they earn, they can spend on these goods. Same thing, when there is more money injected, there is E1, which is our equilibrium 1, because always this must balance, otherwise we're going to suffer by getting inflation. Lastly, I've talked about all these activities that are taking place. Now, I want to talk about the markets that are here in this circular flow. We only saw 2 markets at the beginning in my graph. We only saw 2 markets, which was the product market and the factor market. Here are they. Produce market, factor market. Let me tell you, there are a lot of markets, because for the fact that now we have foreign exchange, we have to exchange our money. So we must have a foreign exchange market, which is the 3rd one in this circular flow. Then I'll let you know, because remember, we talked about financial institutions. So remember now, we have to talk about all these other investments that are done. Let's start by a product market. Product market, some books calls it a goods market, some books calls it an output market. Here we're talking about all these consumer goods and services that are obtained. It's either food or clothing or cars. Here we buy and sell goods that are produced in the market. In this one, it's for your benefit. If they ask as an essay, they love this essay for the market. It falls under a circular flow. So you have to classify. Remember, in grade 10, you were told, how do we spend our money? You must mention the classification of goods that we spend. We spend our money on durable goods, non-durable goods, semi-durable goods, and investment. That's going to give you marks. Then we look at the factor market, which is our factors of production. When I started with your circular flow, I did tell you we don't only provide factors of production, we also provide resources. That is why some other books, they call it input market, because for any production, there must be those inputs. So I'm a household, they sell factors of production on the market. I get salary or wage. For natural resources, we get rent, because that's our land that we use. For capital, we get interest. And those dads, your fathers, your brothers who owns businesses, we call them entrepreneurs, they earn profit. That's the reason behind them starting them. So when you do your explanation, you have to explain that. The factor market includes labor, property and financial markets. What are these financial markets? They are not directly involved in the production of goods and services. I did tell you that, but that's where we exchange money. It's banks, insurance companies, and pension funds. What happens in the money market? This is where we get our short-term loans and very short-term funds, like our savings. That's where some people even borrow in the stokvels. You know, your grandmothers are using stokvels. They fall under this money market. My products are sold in this market are bank deposits. There are also treasury bills and the government bonds. These are investments which can make you get more money. And South African Reserve Bank, it's the one that controls money market. What happens with the capital market? That's where we invest. Capital market, it's where we get our long-term funds. Our banks can also borrow here. We can also save here. We also talk about Johannesburg Security Exchange because he is the one who controls a capital market. Products are sold in this market. Also includes our mortgage bonds and also the shares that we're doing. Then, remember I said to you, there is also foreign exchange. I did show you there because we are an open economy. On foreign exchange, we have to buy and sell foreign currencies to pay for our imported and exported goods. Even those countries that we sell goods to, they have to pay us with the money that we can recognize. So that is why they buy foreign exchange. These transactions occurs in banks. In fact, if you look, if you go to Pavilion, you can see there is a foreign exchange bank there, where even when you're going away, you can go and exchange your money. These transactions occur in banks electronically. The most important ones that we know is the London Foreign Exchange, New York, the Tokyo. And South Africa is traded freely in these markets. When a person buys traveler's checks, also you have to go to these banks. Good people, this is your essay. It's 26 marks and it's for your benefit to make sure that you do a mnemonic that will assist you to remember these essays. Just today, there are 2 essays that are possible in this topic that we did today. The participants, if you're lucky enough, but let me tell you, the participants now are usually us in grade 10. You're big enough now, you are grade 12. The focus is more on the market because we want to make you rich. By the time you finish grade 12, you must be able to invest in these companies. So make sure that you understand, you define the market. From the beginning, when you started in grade 8, you were told what a market is. Remember that introduction, that is 2 marks. That's a free 2 marks. In this case, your introduction can be a circular flow model, is a simplified representation of the interaction between the participants of the economy. Or you can say markets coordinate economic activities and determine prices for goods and services. If you feel this introduction is fancy, just say markets, it's where buyers and sellers meet to determine price. That's the one you learned in grade 8. You'll never go wrong. And you also have to give a bonus for a conclusion. A conclusion, I always say, your introduction is the definition of the topic. And your conclusion, tell us what you think. Your conclusion, you need to tell us what must happen. There is no right or wrong conclusion, but apply your mind. What do you think? In this case, we're talking about markets. How can our markets work successfully? That is from me for today. Yes, it was a rush. The only thing that we're going to deal with next time, we'll just look at these aggregates, how everything now is calculated. then we continue with our term 2. Thank you for listening, and please try and make sure that the minute you listen to the lesson, you have your notes, you checking, you underlining, you correcting. That will help you.
Ningakhohlwa ukuthi nisengathokozela ezinye izifundo eziyisithupha kanye nezengeziwe i-learner wellness, i-career guidance kanye ne-advanced program. Hlanganyela nathi kwizifundo ezi-online ku-068 151 1072 noma ku-GoDigi@godigitalsa.today. Siyabonga.